Hey guys, welcome to the midweek review for the Day Traders versus. Got to go over the setups we had for this week so far, man. Like I just want to pull up the Facebook group so we can look at those trades that we took. Well, the setups we took. If did any of y'all get into any of the trades? Anybody trade this week? I couldn't trade this week.
I
So
Yeah,
couldn't trade either, but I saw it today.
yeah,
yeah,
I bought,
you bought today?
yeah, Nas.
Oh, okay. You bought NAS. What time of day you bought? This morning or afternoon?
Afternoon. So my entry was 25 to 30.
Mm,
Yeah,
yeah.
yeah. I bet you were looking at VIX.
Mm, Yeah.
Yeah. Yeah.
I
That was on
bet you was
point.
looking
It was
at
on
VIX.
point.
Yeah.
Bet you was looking at it. I know you were. Hold on, let me go back to it.
Since morning I was looking at that, and in afternoon I got
I bet you were looking at VIX.
Nice, Anna.
that.
Okay, so this was the setup for this week, right? We had dollar over here. We're gonna look at them one by one. We had dollar over here on Sunday. What we say on Sunday or Monday in this case. What we say on Monday, we would be sweeping this liquidity over here. Hold on, where my little drawing tool at? All right, we said we were gonna sweep this liquidity right here, right? And we were gonna have a wave to the downside, and at worst case, we would potentially take this low out, right? That's what we said. That's on dollar, right? So let's look at what happened with dollar. Dollars over here, clean, right? I ain't even gonna move it. I ain't even gonna redraw it, right? Clean, right? That's exactly what we had happen. But we didn't have a lot of up and down with this one. This just went straight through. And then you can see we tap into almost the monthly slash yearly opening price, right? So we didn't have like a clean move where we get up and down momentum on this one. But that's because we had news. We had a lot of news this week. So because we had all that news, that kind of changed how things were going to react. So that's kind of got why we got the reaction that we did on dollar, right? So before we're gonna go over the charts, but I want to go over everything so you guys can just kind of see how price has been moving, right? So then we had gold, right? I think Shanika put a trade, or she said she meant. I think Shanika mentioned she took a trade on gold. Where is it? Gold right here, right? I thought we would get a deeper run into this gap that we had, but they left all of that open, right? And it just pushed up from where it honestly it pushed up from right here, right where it right at this 46.68 price point. We didn't really have a lot of up and down with gold either because the news just pushed gold up. So you can see that, right? So our projections on gold, I thought we would get a retracement. We didn't get a retracement. We just pretty much pushed up straight up on gold. So I didn't, even if I was able to trade this week, probably wouldn't have seen nothing on gold yet, right? Then we had we had Dow Jones, right? Where we at? Dow Jones, right? What we say on Dow Jones, right? We said we had liquidity below these previous day lows right here. and we were going to be trading into this daily fair value gap. And we also knew we had some liquidity below this low right here. So if we did get our 0 to 1 move, we could have a 1 to 2 retracement, or if we and that would hold us inside of this fair value gap for us to get a 2 to 3 to the downside, so we can go and get a little further down into this gap, and then maybe we come down into the monthly and weekly open, right? Right. So let's look at what happened. That's YM, Dow Jones. We had all of that stuff happen. Let me go to the 1 hour chart. Let's go to the 1 hour chart, right? What is this? This is a 0 to 1 move right here. That's the first move we made right here. And we traded where? Middle of the fair value gap, right? We shot it, we overshot it probably by a couple points. But I'm gonna show you something on that. What tends to happen, right? So even when you make your projections, you got to give it like about two about 100 to 200 points extra up or down on Dow Jones and on Nasdaq, and then you got to give it like 20 to about 20 10 to 30 points on S&P up or down, right? So my projection put us right at the middle, right? But that the reason behind that is because most of the time in the middle of a fair value gap, that's when you get a retracement. But sometimes you get an overshoot, right? And that's okay. We ain't got to be perfect. We just got to get the understanding of what's going on, right? But essentially, and I also showed you guys that, we have 4 quadrants in the fair value gap. You have the upper, you have the high, middle, and low, but then you can split the quadrants in half. You can split the middle in half, the middle and the low in half, and you can split the middle and the high in half, right? So most of this price action sits right around the middle of the lower quadrant, right? You see where we got this bounce off of, and you see where we got this little stall in price. All of this pretty much happened at the middle of the middle lower quadrant, right? Then you can see we had an attempt to push back up from once we made this low. We had a 1 to 2 retracement right here that set up for a 2-3 move down, right? And it was all spot on, right? So then we had our retracement. And remember I also told you guys that when we get our 1-2 or our 3-4, we could possibly see a pushback to the upside. And that's exactly what we got right here. So we couldn't get it at the 1 to 2 move. So we had our 0 to 1 that brought us down to the middle of the fair value gap. Then we had a 1-2 retracement right here to get us to the top of the fair value gap. Again, we sold off as resistance, right? At the top of the fair value gap. And then we went ahead and made a 2-3 move to the downside, where we came all the way down. We had already taken this liquidity, and then we took this liquidity right here with this move over here, right here at our 3, right? And then instead of us going down to hit this yearly opening, we left for low, and we did a 2-3-4 move back to the upside. And now we in a different environment, right? Now we on a potential upside move, right? And we'll go over what that looked like. Let's just finish reviewing the rest of the charts. We just gonna go through the same process and review what's already happened. So that's Dow. Now let's look at NASDAQ. NASDAQ. We had liquidity here. We had the liquidity here. We had previous month low here, right? And Dow is done. Let's look at NASDAQ. Same situation, right? Let's go to 1 hour. Same situation, right? So over here, we had our previous week low and our monthly low that we just made. Our 0 to 1 took us below the low we just made, and we set a new low, right? There is something over here to the right that I probably didn't add to the chart, but let's look. Yeah, it's a little fair value gap right here. I could have put that on there, but that's okay. That's why we bounce right here. There's a gap right here, but we didn't necessarily need it because we kind of knew where it was going to go anyway.
Actually, I did my buy on base of that.
You did it.
Mm-hmm.
Good job. Good job. Again, we had an overshoot. You can see we overshot our 0 to 1 projection by about 100 points, maybe. We overshot by 83 points, 89 points. We overshot our 1-2 move as well. Overshot the 1 to 2 move here. Our high we made was overshot by 120 points. Again, that's okay. But again, once we made our 1 to 2, we did a 2-3 move from here, from this high, and we got our 2-3 move down to here, right? And we tried to do another push up. Our 3-4 went ahead and sent us out, and we started a new trend. So it's the same situation we just went over on Dow. And then finally on ES, we'll look at ES. We had the same behavior on ES, on S&P. I think my little cousin is on. Oh my God. Did I see my little cousin on here? I'm so proud of her. I'm gonna embarrass her a little bit. Let me look in. Let me see who in there. She is on here. Y'all say hey to my little cousin Kelly.
Hi,
She
Kelly.
ain't little. She ain't
Hi,
little, but she my
Kelly.
little
There
cousin.
you go.
She ain't little. She grown, but she my little cousin. All right. So again, S&P, right? 0 to 1. The 0 to 1 should take us below this weekly low. And remember, I told you it could even take us below the monthly low, right? And then we should get our 1 to 2 after we sweep one of those lows, either the weekly or the monthly low. Our 1 to 2 should stall out near the monthly or the yearly price, monthly/yearly price. And then we should get our 2-3 to possibly continue down lower. And then we get our 3-4. But like we had on the others, we did get our 0 to 1, we got our 1 to 2, and we got our 2-3. But on the 3-4, we pushed back up, right? So just like we said in Q, Dow, and now on ES, same situation, same exact situation, right? So Here is our weekly low at the time, and here is the monthly low. Our 0-1 move swept both of those lows, right? And you can see again, we overshot the low, which is okay. We overshot our projection, but we know that's okay. We overshot it by, again, 32 points. 32 points, that's okay. And then we made our 1 to 2 move retracement. Again, where do we say we would stall out near the monthly and yearly opening price? That's where we made this high. That's going to give us the setup for the 2-3 move to the downside. The 2-3 move from here pushed us down near where we got our overall projections. So we didn't need the 4-5 to get us all the way down to the 5. We got all the way down here without the 4-5 move. There is something down here too. There is a inverted fair value gap right here and a fair value gap over here that it was targeting. I didn't draw it on the chart, but I kind of knew that's where we would probably go if we swept this. And then you can see again the 3-4 move took us in a new direction, right? So what we got to do is now we got to look and see how we want to come up against what's going on now, because we got a new trend that may have started, but at the same time, this could just be making a lower high, right? When you look at it, when you look at this, let's go 4 hour. Though we pushed up, it could just be making a lower high, and you'll see why. Because if you look at what we got going on as far as a trend goes, we got a high, lower high, lower high, lower high, and then this could lead us inside of this new week opening gap, the gap that opened up this week, to make another lower high. So we will kind of adjust. I'm gonna go ahead and start back with dollar, and then before I do that, let's look at VIX, and I want to kind of compare the two, right? I'm gonna go to another chart to compare it. I'm gonna open up my other chart for that. Let me switch screens. Oh, my little cousin on. I'm so proud of you, little girl. Get this in, man. I
I'm
know
here and I'm confused, but
that's okay. That's all right. I got you. I got you. All you gotta do is keep showing up. All you gotta do is show up. Okay. So we're gonna compare VIX, and we're gonna look at the 15-minute chart on the VIX, and we're gonna look at it on ES and Dow. All right. So today, what I told y'all to study on Sunday, I'm gonna just say Sunday, even though it was Monday. What I told y'all to study on over the weekend was to study the highs and the lows made between the VIX and the indices, right? Every time the VIX makes a high, the indices should be making a low. Every time the indices are making a low, the VIX should be making a high, right? So let's look at what happened, right? I'm gonna use my little drawing tool for this. So this is a low on S&P, a low on NASDAQ, a low on Dow Jones. This is the 9 o'clock hour, right? This is right before the market open. This is a high that was a previous day high. And then this is the high on the VIX right before the market opens. So we're in sync on here, 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 and here. So what is this telling you that we can do? Should be an easy answer.
Excuse me. If you will put your crosshair on, so everything will be on same time. So it will
Yep.
be easier to understand. Yeah.
Yep. Yep. So if we looking at setups around this time and we already established what we looking at, right? At this particular point, we should be looking for buys on indices because we making a high on the VIX, right? And then once VIX starts to bounce down here, what's happening over here? This is the hold on. At this point, when VIX start to bounce, this is the 1045 candle, right? And at the 1045 candle on VIX, VIX pushes up from where we are right here. VIX pushes up. And when VIX push up over here, same time frame, we making a high on Dow, we making a high on NASDAQ, we making a high on S&P, right? Repeating it again, high on VIX, low on S&P, NASDAQ, Dow. And then it finished the day up on VIX with a low. We finished the day up on the rest of the indices with a high. And it's pretty spot on, right? All you got to do is once you see that you're at a level, right? And what you're not seeing on this particular chart, because this particular chart, I keep this one clean. But what you're not seeing on the VIX is the prices levels that we making a low at right here, we're inside of a gap. So we inside of a gap. And inside of this gap right here, this is the gap that opened up price. We pretty much responding at one of those levels, right? I'll show you on the other chart because we can switch over now. Let me see what the comments are saying, the chat saying right now. I couldn't trade, productive. Hey, Anna. Tree saying facts. Yep. Tree shot us a message in our group chat and was like, yeah, Vic sold indices bought. Yeah, that's it. That's what's supposed to happen. That's what's supposed to happen. So let me switch over back to our setup page. So now let's look at VIX. And the reason why we got those setups, right? So once we got this high and we failed to take out this previous day high, right? We sold off, we took out the low for the week right here. And then when we got our sell-off, this was that whole move to the upside on the indices right here. And then when we got that sell-off, we're starting to bounce around the midpoint of this gap, right? Which is at 1790, right? We again, it's okay if we get a plus or minus overlap. It's okay if we get that, right? I'm okay with that, right? I'll show y'all a little trick that you can use too to to get a projection from when you see one of these kind of moves, right? So we got our low made right around 1790, which is the middle. And then we pushed back up and we responded to the daily opening price and then sold off again, which gave us, we got a buy on indices while we were selling here. We had a sell on indices while we were buying here on VIX. We had a buy on indices as we sold off on VIX again, right? So that's kind of what took place. That makes sense?
Yeah.
Yeah.
Absolutely.
Mhm.
Okay. All right. So now what we're gonna do, since we got a new low for the week, I'm gonna adjust this. It's our new weekly low. And then our weekly high is this price. We ain't really worried about that right now, but we do have let's go to the 1 hour. If you look at it, if we do keep selling, we do have some liquidity below that we can start trying to shoot for. If we do decide that we want to keep pushing down lower on VIX, which would line up with us continuing higher to the upside. So we decide that we want to continue to the upside on VIX. I mean, on the indices, this liquidity that's below us, the weekly low we just made, the previous day low, and then tapping down into this monthly, yearly opening price, and then this previous week low. That'll be what we need to watch out and see how they want to target that, right? So for now, no projections on VIX, but just understand we got liquidity down there, right? And looking at the daily on VIX, right? You can see we just came back down into this gap and we just kind of sitting in this gap, right? So we'll have to kind of watch out for what happens with this gap. If we're going to go ahead and close it completely, which means that we get down to 1584, 86 over here, or do we catch a bounce off of this? If we catch a bounce, that's lining up with us making a lower high on the indices on the 4 hour and below, right? So no setup, but just kind of understand what's going on. I don't no projections on this, but we'll get the projections on the rest of the indices and stuff. Then we'll look at dollar. Oh, let me give you this chart. Let me give you this chart. And let me see something real quick. Like I said, my computer is running a little slow. Might have a few too many things open right now. There's a couple more windows down here on my other screens. My other trading platform might be running a little too heavy. So we're gonna go ahead and close that since we don't need it right now. Okay, let's see how that work out. Okay, let's go VIX. I'm gonna send this version. No setup, just get the markups off of this one. Okay.
Okay. Thanks.
Mhm.
Okay. All right. Then we go into dollar. And then dollar, we'll go with gold. Okay. So we pretty much have already blew through these projections for a dollar, right? And now we left liquidity below this low, and these two lows are at risk too. But I don't think we're gonna mess with these for now, at least not for today or going into the rest of the week. But this is our monthly low right now. This is the monthly low, and we got equal lows, relatively equal lows, because these are pretty much almost lining up. So we'll just say those are pretty much equal lows right there. And then we got the low we just made. We swept this low. We swept all the liquidity in here. So this is done. The previous week low is taken. And now, from where we closed on yesterday, I think this low might be in place for now, right? So we will probably get a shallow 0 to 1 move, right? And you can see this little order block right here has a inverted fair value gap on the inside of it. So I'm going to target my 0 to 1 down here. And if we push up, I'm going to say that this is a larger time frame order block right now. And you can see we got fair value gaps on the inside of it. Kelly, I know you might be confused. I will get you straight. Just listen in. Don't worry about that. Okay. I like that we got this lower high right here. So if we do want to take out these lows, it should happen at this lower high. So if we get a move to the downside, it should look something along these lines right here. And then we sweep this lower low, these lows over here. And then our five should be trading to something too. So let's go to like the daily. Let's look at it. Yeah. So if we sweep this, our first stop will be here. So we can put our 5 right here. There is a order block. There's a little small fair value gap right here. Not gonna draw it, but just know if we do drop this 5, should stop down here somewhere. The thing I was gonna show you guys is standard deviation, right? Standard deviation kind of give you a rough idea of your range, right? And where you are projected and likely to go, right? So standard deviation, that's a new term that I'm bringing to you guys. Where is my fibs for that? Let me refresh this chart.
I haven't heard standard deviation since college when I was doing statistics.
Hey, you about to get introduced back to it in trading. So your standard deviation, and you can get it when you look at the fibs, you can get your standard deviation, right? And basically, your standard deviation is basically every 100 ticks on the fib, right? So every time you get, so from 0 to, so when you measure your fibs, you measure the impulse, right? You measure the impulse. We're gonna measure this last impulse to the upside, right? And from 0 to 100, we got our full range, right? A standard deviation from 100 to the next level down is around 97, 60, 621, right? A standard deviation up puts us right above where these previous week highs are. If we split that in half, that gives us basically where we expecting our 5 to go, right? Splitting that standard, a half a deviation, right? That's pretty much giving us where we have our, let me put it on here right quick. That pretty much gives us where we're expecting it to go. And right where we're expecting it to go, a half a standard is right here where this order block and this fair value gap is right here. So that's why you can you can have a good idea that this is likely where this is going to go. And you do this by measuring the last impulse. The last impulse
Oh
I'm
my
measuring.
goodness.
So this kind of give you a projection that lines up with all of the stuff that you're seeing on the charts, right? So everything you see, right? You see your order block, you see your fair value gap, you see your liquidity. But then once you add in the standard deviation, you can say, all right, I'm gonna go a half or a full standard, or sometimes it goes 4 full standard deviations or something like that. But you can get an idea of where you're expected to go because you got all these confluences that line everything up, right? So for dollar, we're gonna say that we're gonna go a half a standard. And we can expect that because we got this candle right here, which is an order block. And then we have this small candle, this small fair value gap right here. And that lines us up with price coming right around here, right around half a standard. I will shorten it by putting it here so that way I know, I should at least get the majority of that, right? So we can get rid of that. That's going to be what we look for the downside. What we look for on the upside, right? Same thing, right? We're going to do the same thing. And we already seen that 2 standards should give us the previous week high. We already seen that already, right? We could go higher, but we looking for targets that we know we can hit, right? So we'll just look at the previous week high. And if we get a 0 to 1 move to the upside, that means that we should be pushing through all of these down candles. And then we should start using this range to push us higher, right? So our 0 to 1 should take us above this little high right here. Should take us above that, right? And then our 1 to 2, I'm not sure how far we could come back down, but I'm gonna look at this little small order block right here as where we pause, take a little pause, and then come down. We could come further down, but that's what I would manage to look for. And then a 2-3 move. What do we have? We have another high, right? This 0 to 1 could take out both of these highs, but if we don't, If the 0 to 1 takes out this high and this high, then we just still look for a 2-3 move from somewhere after we get a retracement, right? But if I'm a betting man and we don't take out the high on the 0 to 1 move, the 2-3 move should take out this high, and then we get a pause because right here we have an inverted fair value gap with a fair value gap. So we should get another pause around this price range right before or right as we're taking out this high. Then if we do get a 3-4 retracement, it should pause right around where we took out all this level right here. And then this 4 or 5 move should take us above this. If we do get a sell-off, it'll likely happen after we take one of these highs right here. If we were to push up and sell off. So we should get a sell-off if we're going to sell somewhere as we pushing up. It'll happen at the 1-2 or the 3-4, right? But I'm going to leave this here. But just understand, if we push up and get a sell-off, it should happen at one of these points. Same way with our buy. If we don't buy immediately and we buy at one of these levels, I'm guessing it'll probably happen after we sweep these. And then we get a reaction, because I don't really see us buying. If we do sell off and take these lows, I think that's the only way we get another buy after the sell off. So I wouldn't think we would get a buy until we saw us sweep below these equal lows. So we probably get it at the 2-3, at the 3-4 or the 5 move, right? Really, I would rather for it to be at the 5. So if we do get a buy, it should happen around here after we sell off, right? So we got 4 potentials, right? And then we also got this daily fair value gap, which I need to bring to the front. And now you can even see, right? If we do get the 5, like if we don't, like I showed y'all before, like we could get a plus or minus, a couple 100 points. That would make sense for us to do that, because that means we would be coming down into this daily fair value gap, which is okay, right? And then you'll also see 2 standard deviations is pretty much down there at that fair value gap. So let's see. If we go 2 standards on this, it's pretty much down here, right at 200. So that's the 2 standards. So that give you pretty much spot on. If we do overshoot where I project us to, we are likely about to come down into that fair value gap. So keep that in mind too.
Corey,
Uh-huh.
where do I learn more about this deviation?
I gotta remember where I learned this from. I can't remember who I learned it from. Let me find the guy.
Okay.
I'll have to dig deep, because this is something I'm using a lot of stuff. I'm trying to go back to not go back to basics, but go back to like some of the easier and simpler things that I learned
Mm-hmm.
from the beginning, bringing in the VIX, using standard deviations and stuff like that.
I
I
asked
learned it so
because
long ago.
I never knew that it was a such thing as standard deviation. but I came across something like this before a long time ago, and I called it something else. So when you said it, I was like, "Oh my God, this is what I've been seeing," but I couldn't put a word or a name to it. Um, so if it's okay, not in this class, but if it's okay, I want to send you some charts so you can see what the pattern that I'm seeing, and you'll let me know if it is the standard
Mm-hmm.
deviation or not.
Mm-hmm.
All these years I've been calling it something different and I just couldn't make it make sense.
No problem.
Oh my goodness. Okay. Thank you.
No problem.
Uh, where's my mute?
Okay. Let me give y'all $1. The momentum on dollar right now is sort of bearish. And that's because we having a lot of uncertainty right now. Like with Trump, he spoke today at the World, I think it was at the World Business Forum. And he said that one of the things he said in the speech was that the World Economic Forum, I'm sorry. One of the things he said in the speech was that you know, we dropped, the market dropped because he mentioned that he was going to put tariffs on the EU. I think it was 100% tariffs. I don't remember the number, but that's why we got the drop, right? But we got the rebound because he said he wasn't going to do it. So the market dropped because of the tariffs, and then he reneged on that, and it bounced again. So, but he's still pushing towards doing something to Greenland or somehow taking advantage of and trying to push Greenland. So I think that we're going to have like an up and down market. We still in a range right now. Overall, the whole market is in a range right now. So now we're going to go to gold. And looking at gold, we got to kind of, we just made a new all-time high. Just made a new all-time high on gold. So, and I think we talked about 48, 40, we talked about 40, I think we talked about 47.50 as being the main price point, but it blew through 47.50 area, which is right around here. And we actually made it all the way to 48, 48.90, which is crazy. So that just lets you know how volatile this stuff is right now. To the point where you can go over 200 points almost on gold with all the uncertainty and stuff. So we will look at where we are now, right? So let's just take this move. I'm gonna copy this. And if we come down, it will happen at the new week opening gap. We probably get a bounce from there. And then from where we closed, if we do come down from where we close, I think we'll come down into this new week opening gap. I don't really see it happening, but just if we do, let's look at it daily real quick. Yeah, we got a fair value gap. I don't even think we coming down that low because we got this daily fair value gap now on gold. which starts here and is to here. Where's the low on this? 56.50, 47.56. Daily fair value gap. Right. And then inside of that fair value gap, we already got the low from yesterday. The low from yesterday is making our high on this fair value gap. So I think we sweep, if we do come down, we sweep either of these little short-term lows and the low we just made. And we pause somewhere in between the upper quadrant of this fair value gap between 4688.4 to 4756.7 and giving us a midway point around 4725 being like a downside primary target on the downside. So I think we do something like this. If we do come down at all, we sweep this and then we push up. And we go ahead and hit that 5,000 point or get near that 5,000. And if we don't, I think we go into a range. If we don't get this, we go into a range near 5,000 on gold. Right? I don't see any other projections on gold other than this right now. No downside move. And I think this is what we should be looking for on gold. Okay. I wouldn't look for anything outside of that until we trade through this daily fair value gap. So, hang on 1 second, guys. Sorry about that. Okay. So this is gold. Is it make everything making sense to everybody?
Yeah.
Okay.
Yeah.
Okay.
Yes, it is.
All right. All right. Now we'll go to Dow Jones. And Dow Jones, you can already we can already see a couple things going into Dow. If we're looking at Dow, the first thing we'll notice is this is gone. They swept this. So we can get rid of that, right? The second thing we notice is we bounced off of this daily fair value gap, right? So now we know that they are trying to buy off of this area between 49,095 and 48,616. We got evidence that they are trying to buy it. Now we can also see we got fair value gap here, we got an order block here, and we got a fair value gap here. So if price does come down, we have areas where we could see a buy come into place, right? So we could sell off and bounce here in this range right here, or in this range right here, or we could go lower and buy near this range right here where we got our fair value gap. So from where we closed, which is here, we could see price sell off into this range, right? And if we come into this range, our 0 to 1 pushes us down here back into the daily fair value gap. But at the same time, our 1 to 2 could stall us and give us a move down lower if we stay bearish, right? Because now we got our weekly low. Got our weekly low right here. If we continue bearish, right, that's what we need to look for. And I'm going to just use this last measurement, this last move where we had this high to this high right here. And what do we got? Let's see what our standard deviation look like. Okay, 100, half a standard puts us right there by our weekly low. I ain't got it on, I don't have it on the chart yet, but I'm telling you already that that's what it's looking like. So that's our half a standard right here, right by this weekly low right here. So if we do sell off, that's looking like where we should be expecting it to go, right? Weekly low, at least. And that also, you got three things that are combined to give us this projection, right? And I'll go ahead and put it down here. The three things are weekly low, a standard deviation, and then the monthly and yearly target. So if we do sell off, that's where I'm going to be looking at, right? If we buy, right? We buy and we push up hard through this area, half a standard on the upside puts us right along near those highs at 50,000. Puts us right near those 50,000 highs, right? It should have been here. Hold on. Be right around here. Sorry. I added the wrong level. So okay. All right. So yeah, our half a standard puts us right here, right where we right near our all-time highs, right near that 50,000 target, and then right above these highs that this liquidity over here. So if we push to the upside, that's where we should be looking at, right around here at least, but I'm just going to round it to the 50K point. And then if we do push to the upside, we don't need these no more. We don't need this anymore right now. You can see if we do 0 to 1 from where we close, you can see why we're coming back into this new week opening gap, right? Then if we get in there, we should hold inside of it. And then our 2-3 move should push from inside of this gap. And then that should take us either up through this all-time high or at least above these recent highs right here. And then we may get a retracement back down into whatever fair value gap we create inside of the 2-3 move, or we bounce off of this weekly new week opening gap. And then that should take us to our 50K all-time high, and maybe to our single standard deviation. Okay. If we get a sell-off and we just ranging, of course, again, like I said before, we get our sell-off inside of this new week opening gap, which I actually want us to just sell off up here, to be honest. I want to push us back down. I'd rather keep us in this range, but that's a personal opinion. And that don't get you paid. That just gets your feelings hurt. So either we sell off at the 1-2 or the 3-4. I'm just gonna draw it at the 3-4, but I do think we could see sell-offs at either 1-2 or the 3-4. So we just gonna add that on there too. And then again, just like we had before, I'm not gonna put that on here because I don't want to mess up everything. But again, if we do push down, we could have bounces at the 1-2 or the 3-4 on the downside move. I'm not gonna draw it on here, but just know if we do come back in here and you see everything setting up, you see you see VIX lining up with the high around that same time, you can go ahead and buy inside of there too. So let me give you guys Dow. I'll be on the charts tomorrow too, so I'll actually be trading tomorrow. So I'll have some time to trade tomorrow for the first time in a while. But also we had such a big move early in the week. Thursdays after big moves, they typically go sideways and they typically will be a little janky. So you may or may not get a move. And if you get a move on Thursday, it may be one of those things where you just got to get in, get out. Right. So, and if that's the case, take your money on the first swing and make your goal on the first swing and go about your business. You know, that's all you got to do. That's how you got to look at it. This is NASDAQ. We already took the previous week low, the monthly low. We actually set a new low already. And you can see we got the previous month low right below us. And our current monthly low that we just made is sitting right. The same thing. It's sitting in line with a standard deviation. I'm not going to draw it this time because I think you guys got it. And if you're figuring out where to draw it from, use the last swing. Use the last swing. That's this low to this high. Draw your fibs. Go. You're gonna do the negative and the positive on the fibs. I'll show you. Let me give you those fib levels instead. I ain't gonna talk through it. I'll just give them to you. This is the last swing. Right? And you're gonna do every 50. 0, 0.5, 1, 1.5, 2, 2.5, and so on. You don't have to do all of them because by then you should have made your money. Then on the downside, you're going to do negative, a -5, -1, negative 1.5, and -2, and so on like that. So this is what you would do with the fibs for the standard deviation fibs. Let me update my template so I ain't gotta do this again. So every half gives you your next standard deviation, right? And so, like I said, our standard deviation, a half a standard is right here at 150. That put us right here at the previous week low. So if we sell off, we already know that we should be sweeping the monthly low and making a new low. And then we know our previous week low down here, and we got a half a standard deviation right down here as well. If we take out that low and we look down even further, there's another low right here that it could be taken out. And then you see where our 200 is, there's another low right there that's right in line with where we are looking as well. There's another low. There's also an order block right there as well. So another couple reasons for this to be accurate, all lining up, all things line up. So projections for the downside, if we do push down from where we close today, which is right here, our 0 to 1, I'll say 0 to 1 where we hold inside of this order block. If we push up and get a 1-2, I think we hold underneath this monthly yearly opening price. And then our 2-3 pushes us down to take out this low right here. We try to bounce off of this order block inside of this fair value gap. Let me get rid of this. Inside of this fair value gap, right here at this order block. And then we get our 3-4 to the upside. There should be some type of fair value gap inside of here. And then that's where we get our sell from if we do continue to the downside. And then our 4-5 move take us down below this low, or right at this previous week low, previous month low. That's what we should expect if we go to the downside. I'm gonna pull this down a little bit. If we get an upside continuation, right, like we already doing right now, we already in our 0 to 1 move from the close, right? Right. So our 0 to 1 move should definitely take out this little high we just made, right? And then if we looking at trend lines, right? And I don't often looking at trend lines, but if we look at trend lines, that means we got 1 touch, 2 touch, 3 touch, a 4th touch should happen somewhere around this new week opening gap, right? So if we already projecting a 0 to 1 move to the upside where we take out this high, that should put us above that high, near the high of the new week opening gap. So that means that our 0 to 1 should take out this high from yesterday. And then if we're going to keep going up, which means that we're going to break this trend line, that means we should hold above the weekly opening price. And our 2-3 move should push us above the new high that we just made and outside of this trend. That means we change directions and we going even higher, and we may get a bounce off of this. And our standard deviation should come above these highs right here. And let me just double check for you guys so you can see I ain't crazy. You should get a standard or a half a standard right above these highs, or right near the highs right here, which is a half a standard right here. which lines up with us taking out these two highs right here. So we can expect for targets to be right around 25,900, 29, 29, 25,900, or 26,000. And if we decide that we get up here and we want to maintain our downside trend, we know again, we have trend line liquidity above here. We just took a high. We could reject at our 1-2 or our 3-4. Any one of those. So we have the potential to reject at these levels. I'm gonna give you this charts. Any questions? Does this make sense?
Yeah, definitely.
Yep.
All right. What's up, cuzzo? Cars. My other cousin on too, y'all.
Hey, what's up, bro?
You know, just listening. I'm gonna have to call you on my own.
That's cool.
Yeah, I might do the same thing, man. But the concept is sound. I understand what you're saying.
Mhm.
One of the things I'm having trouble with is like all the symbols that you're using, like the micro E-mini for NASDAQ.
Mm-hmm.
Are you choosing contracts or it's like it's a quarterly contract, right?
Yep.
Okay, so you choose the contracts by quarter.
Yep. And
Okay,
the contract expires.
and it
And
expires.
when the contract expires, you need to be either in the current contract already. You need to be moving to the next contract. There are 4 different contracts each year.
Mhm.
I'll hold that question and
Okay,
I'll go over that after I go over ES. Because
okay,
ES is pretty much the same as this.
okay.
And I'll go over that. All right. So I just dropped NAS and then the final one is ES. Essentially, it's the same setup, y'all, on ES. It's just different numbers, right? And different PD arrays, right? So you can see we got on this 4-hour chart, we got a fair value gap that got inverted inside of this order block. There's a gap down here. There's liquidity over here. We already took out the monthly low, and now we made a new monthly low, right? We took that out. So now the low is here for the month, right? The low for the month is 6814.50. And we took out the weekly low. The weekly low and the monthly low are now the same price point. So we don't need that anymore, right? Let's move this over. We'll come back to that. I think we're going to need this. We'll definitely need this downside move. Just like we mentioned on the last chart, right? We got a high, another high, some other high, some other high, and then now we are reaching back into this weekly weekly opening gap, right? And usually we come in here, and if we're going to continue in the direction that we were initially sent into, which is to the downside, we should get a reaction inside of there, right? Should get some kind of reaction inside of there. Let me pull this over a little bit. Should get some kind of reaction, right? So just like we mentioned before, if we get a move to the downside from where we closed, right? we got order block. Well, let's start from this low, right? We got an order block. We got a fair value gap right here. We got liquidity inside of the fair value gap and touching the order block. So they need to come back down here at some point. Then, right, we got a low here. We got a fair value gap. We got an order block right here. And we got a new high. The new high is at the weekly opening price, right? So if we are going to be positive for the week, we got to take out this high, right? So we'll start with the upside first. So where we closed at yesterday or today at 4 o'clock, the close is here. We're already in the 0 to 1 move right now because from where we closed, you can already see price pushing up. So from the 0 to 1 should definitely take out the high from yesterday, right? Once we get the high from yesterday taken out, we make our 0 to 1 high inside of this new week opening gap. Once we do that, our 0 to 1 move, our 1 to 2 move should come inside of this new week opening gap. And either we're going to get a sell-off from here, from the 1 to 2, or the 2 to 3 move, whatever we make. We don't know what they're going to do yet with it. But, let's see. Oh, all right, Trees. We should get our sell-off from inside of the new week opening gap, right? If we're gonna sell off, it should happen at the 1 to 2 or the 3 to 4. Our 2-3 move, right? That should at least take us above one of these highs, right? And then our 3-4 should retrace back into the new week opening gap. And if it's not gonna sell off, we should hold up either the high or the middle of this gap. And then we should go ahead and aim for at least trading near or at the all-time high. If we're going to keep going up, right? If not, we sell off at the 1 to 2 or the 3 to 4. I'm going to put it up here. Right? If we fail this, right? And we start to sell off instead, right? Which this is less likely to happen, this downside move, because we already pushing up. Once we trade down, we got to deal with this order block right here and this fair value gap. So our 0 to 1 move should be down into this range, right? And then if we do bounce, it's going to happen in here. And our 1 to 2 move should take us either at or above the monthly yearly opening price or underneath the daily that we just made. And then the 2-3 move should take us to deal with this order block, this fair value gap right here, and this liquidity. So we'll have to deal with that, right? And then finally, if we get a 2-3 move, we should have a new fair value gap to the downside to take out the low we make right here, and then the low we make right here, right? And then our 3-4 move retracement should stall us out inside of that area. And then our 4-5 should take us below this monthly low. And then let's find out over here where we could be looking at, right? So we got our monthly low right here. We got another little small low right here. And we got another low right here. If we do standard deviation, if we look at standard deviation again, from the last swing up, last swing down, should put us right, pretty much right where our 5 is, right? And what what's over here at that half a standard. Some consolidation area right here. But this low right here is the main thing I'm looking at right here. This little low right here. And that's pretty much where we at. But I'm cool with us hitting that. So I don't need to look at this standard deviation. But again, just to show you guys why I'm getting some of my targets and just what to look for. And then if we get our 0 to 1, when we get our 1 to 2, that could be an area that bounce. And then we get this whole move to the upside, just like the 3 to 4 could be a continuation to the upside. I'm not going to put it on the chart, but we've already gone over why that could also be the case, that we get a bounce from those areas too. So that's what I'm gonna be looking out for the rest of the week. What I didn't do is I didn't look at the news yet and the earnings. See what we got. I didn't look at that yet. Usually that's where I start, but let's look at it over here. I'm gonna switch charts, switch screens. So Thursday is actually a big day. Thursday we got PCE at 10. We got GDP at 8:30. So we got some reasons for the market to move on Thursday. We got those two big releases and we got unemployment claims. So that's definitely things to consider. And then Friday we got PMI. That's a big one. And then we got consumer sentiment. So we still got 2 good days to trade on Thursday and Friday. But like I said, Thursday been a little up and down lately, man. Like especially after we made some big moves already. So if you don't see some clean moves on Thursday, and you in a trade, just take your money, go ahead about your business and call it a day. You don't try to go for the long targets, the bigger targets. And then you can see for the rest of the week, we got Intel. That's going to be one we got to pay attention to on Thursday after the market close. No big names during the open. Too big, nothing too big. We got some familiar names, but nothing that's going to move the market. And the only thing that could move it, maybe Intel. So nothing crazy to look out for earnings. And then on Friday, nothing big on Friday either. Got some banks, Booz Allen, some insurance companies. Nothing too crazy, right? So that'll kind of round out the rest of the week. And then, again, my advice always at the end of the week, if you got some trades in already, try to lock in as much profit as you can for the week. Don't trade as heavy at the end of the week, especially if you already made some money already. So and then finally the stuff we can do like a little small beginner situation. And I'm gonna switch over to another chart. Let me go over to this chart. Okay. Actually, not this one. Let's open up a new window.